Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Before starting with the analysis, I would like to mention that we have now rolled over to the December contract. So all the references and information you're seeing on this video is now on the December contract. Okay, so as we mentioned in the last few briefings, we had some recent change on the larger time frame. Midweek, we broke from this short-term balancing range and took the 3000 area to the upside and made an approach to the all-time highs. You need to remember that at the end of July, when we recorded these all-time highs, there was very little excess left there. So now that we consolidated for 6 weeks or 5 weeks or something like that during the month of August, and we broke to the upside, and it seems that we're seeing some momentum, and the approach is very near the all-time high, there is a good probability that we will at least test this area. The specific level is at 32.25. So yeah, on the weekly, we've been one time framing higher now for 2 weeks. On the monthly, we went back outside the previous area where we failed from in the month of August, and now we have returned to the 30 area and leaving. I mean, we're very close to the all-time highs. Daily wise, on Wednesday, we saw that break from the 5-day, 4-day balance area after probing to the downside earlier in the week. And this gap that we see over here in the green held. It was a failed break to the downside. We pushed back up, went to the other side, and was enough to break. And Thursday saw continuation of that move. And Friday, we had a form of short-term balance as an inside day. So far, we broke from this intermediate term balance range. We left a couple of gaps on the way up. And then we had a little short-term balance of 4 days. And then we broke from that one, and we are now accepting those highs. So it's looking pretty good. It's making advancements. Now on the market profiles, you will see in a second, there are some data points that suggest that it's not that the market is weak, but there are some evidence of weakness in the sense that we see some short-term money driving the market. But other than that, this monthly, weekly, daily timeframes point towards further continuation to the upside. Now looking at the market profile, yes, well, Friday session, as I said, is a form of balance. We traded within Thursday's range. The important thing that I would like to highlight there is that despite having an incomplete auction to the upside and no excess and very close high to the all-time highs, we were not even, it was not even possible to trade or to test or to follow through on to the upside. So two things could be happening here. Number one is that we are just accepting this before going forward. But the second thing is that the market could be a little bit too long in the immediate term. If that's the case, we will see some correction downwards. And if we do that and we correct downwards, the key area to pay attention to will be the previous range high, which is right here at 29.91.50. Let me mark that down. So if we correct, what you don't want to see, for the upside upwards movement not to be compromised, you don't want to see acceptance below, back within that short-term range. So yeah, little happened on the Friday session. I'd like to point that out. We didn't continue upwards. It is possible that the market has an inventory imbalance. It's difficult to say right now, but when a market gets this narrow, something for sure is that now we have a very high chance that we will break away in one direction or the other. So that gives us like technically these 5 scenarios. The first scenario will be breaking to the upside. Clearly, the all-time high is the target. If we get acceptance above, the continuation odds are good. If we fail to get acceptance above or we start failing back, then you will probably have a failed break, and then you should consider like the low of Thursday in the first instance as the destination if that fails. So that's 2 scenarios. The other 2 scenarios is we go down, potentially correcting some of the inventory imbalance if it exists. Now, if we fail to get acceptance back within the 4-5 day range, and we start going back up, clearly it's a failed break lower, and you will be seeing, I mean, you will be focusing on the all-time high as the destination. That's another 2 scenarios. Well, no, the third scenario, sorry, that's one scenario to the downside. The other scenario is that we do get the acceptance, in which case it will be this whole thing over here will be a failed break from this range, and we may be going lower, probably towards this gap. So that's 4 scenarios, and the fifth scenario is that you stay within the range. That's, I mean, I don't think that will happen, but it could happen. Let's remember that we have a major event on Wednesday this week in the form of the FOMC, and the market expectations are that we will get a rate cut. Now, what could happen is that the market is very quiet ahead of the FOMC. Probably, well, I would have expected to see more volatility on Friday, because we also had the rollover, so I would have expected to see volatility due to the rollover and adjustment of positions ahead of the FOMC. We didn't see that. I don't know. I mean, there could be some volatility tomorrow, maybe, but I'm pretty sure that Tuesday and half day on Wednesday is going to be very quiet ahead of the event. So keep that in mind. Keep this whole structure in mind. Keep the references in mind, and be wise. Manage your risk wisely. Understand if you get into a move, you need to have all this context clear in your mind, so you adjust your expectations of the move. So, for example, if you take a trade, you have a directional move Wednesday morning. You should not expect to see a lot of extensions ahead of FOMC. So you need to manage it accordingly. But as we always say, odds are just odds. Anything can happen at any time, and I think that the recent sessions are a good evidence of that. So keep this big picture in your mind. We're very close to the all-time high. We've been trending up. We broke from a big range and then a smaller one, and we have 2 gaps on the way up. And what I said earlier about the short-term traders, you see some mechanically traded references here and there, but overall, I think the odds are good to the upside. A correction is possible. That's the conclusion.